Hello, everyone. Welcome back to Navalier Market Buzz, episode 36. I'm Crystal Navalier, and I'm joined again this week with my father, Louis Navalier. Now, Dad, before we get into some of the earning announcements, let's talk about the economic landscape. What is this sell in May and go away about?
Well, you're showing some charts from our friends at Bespoke that show that the market is notoriously soft starting in May, and that continues through the summer months, and then the market gets its mojo back in November. So this seems to be caused predominantly by the pension funding season. People have already filed their taxes and made their pension contributions. So the money pouring in the stock market starts to sputter usually by May. You can still, fund pensions like SEP programs, and that's a self-employment IRA and things like that. But and then 401ks and stuff are still contributing. But the big IRA contributions and things like that usually dry up after April. So we have this swoon in the market, and the seasonally weak period is actually uh, late August, early September. There's an estimated tax payment due on September 15th. And even though the IRS is very precise, if you don't withhold enough, they'll fine you on the interest. People seem to kind of drag their feet and then make a big tax payment mid-September. And that just seems to have pressure on the market. So I know everybody's enthusiastic. We just had the biggest rally in the market for the S&P in 20 years. We had 9 straight days up, but we are overbought right now. So it's going to get bumpy.
In a recent YouTube short, you had said that we're in a deflationary environment. Can you expand on that?
Sure. In fact, the Wall Street Journal just had an article talking about how commodity prices are falling, pretty much everything except gold. And that's because a lot of countries are in a recession. The orders in Asia are way down, due somewhat to the chaos with the trade and excess inventories. Europe is definitely in a recession, okay? And so basically, we have deflation. We saw it in the last 2 months of the consumer price index. The most recent producer price index plunged. The PCE, based on the calculations, the components, it looks flat as a pancake. So we're in a deflationary environment. All economists are trained to fight deflation. The issue we have with our Fed is obviously our Fed chairman's not an economist, he's a lawyer, and they have put some new people in the Federal Reserve that are not qualified, and they seem to move with a consensus. So I'm a little worried about the Fed. I don't know why they play hardball, and they better be cutting here pretty darn quick, because if they don't cut, we'll get in a deflationary spiral, and that is not a good thing.
If Europe's in a recession, why is the German stock market going up?
That's a great question. You're showing a chart of the DAX index and how it went down abruptly on the essentially the Liberation Day tariff announcement, and how it's almost erased all the losses. And obviously, that's for a variety of reasons. One is they have a new chancellor, Mr. Merz. The other thing is that they're anticipating a favorable resolution of the tariffs. Obviously, President Trump suspended the reciprocal tariffs, and they're anticipating favorable negotiations. So essentially, if all countries drop their trade barriers, okay, there will be no reciprocal tariffs. So in the end, we might have freer trade as a result. Okay. So this is not being reported in the media because the media is overwhelmingly negative, especially the British media. They don't like our president. And you got to realize in politics, you have to have a scapegoat. You want to make sure any problem you have with your country isn't due to you. And so Trump has essentially become not only a scapegoat for Europe, but a scapegoat for all the world's problems. But if the Germans aren't worried about the tariffs, I don't think we should be. And I wanted to show that chart so everybody can see how dramatic the reversal has been. Europe's also very interesting. Volkswagen announced stronger sales in the first quarter. Volkswagen is beating Tesla in EV sales in Europe. And but their earnings plunged over 40%, largely due to the fact that they don't make them as much money on EVs as they do on what we call internal combustion engine cars. So, because Europe is mandating all EVs by 2035, if I was running Volkswagen or Mercedes or BMW, I would just pick up and move my manufacturing to America so I could continue to build internal combustion engine vehicles well beyond 2035, because in Europe they're not going to be allowed to do that. And of course, all those companies have plants in America right now. President Trump said he would give the foreign workers visas, okay, in case they have to bring workers over here to set up shop. So it's going to be very interesting how things unfold. But if Europe is happy, we should be happy. And that's my main message.
Now, we have some key economic releases this week. What do you predict for the ISM service on Monday?
It should be up. ISM manufacturing was very disappointing, and it dropped the lowest level in several months, bottom line. And so we need the service sector of the economy to carry us. And we are a service consumer-led economy. We had obviously stunning retail sales in March. April should be okay as well. So I need to see that in the ISM service report. Otherwise, you'd lower the GDP estimates for the second quarter. Just so you know, the Atlanta Fed's estimate about 2.5% GDP growth on the second quarter. It's early. We've got a lot of months to go, but we should have a nice economic rebound here.
So now, why was the Conference Board Consumer Confidence Index so disappointing?
Well, yeah, that was a buzzkill last week, although the market kept rallying. I was shocked. I mean, I I dug in the details. You're showing charts here how the present situation, a component was basically okay, but expectations had collapsed. Okay. So there's all these components in the consumer confidence index, and people just had horrible expectations. And I would chalk that up to the news media, the buzzkill, the warnings that the shelves are going to be empty and things like that. I mean, you got to realize if you are on the opposite side of Donald Trump and you want to humiliate this guy, you just have to have empty store shelves. And he met with Target, Home Depot, and Walmart all at once. And obviously, he doesn't want that. And you get all these articles that the Port of Los Angeles is ground to a halt, and Asia's not shipping us anything. Well, one reason is the imports surged 41.3% in the first quarter. So they're all stuck with all this inventory for now. But Donald Trump probably hurt himself when he said, "Well, there may only be $2 to pick from at the store instead of 30, and they might cost a little more." So this is what's been being blasted out there in the media, and it's basically caused the average consumer to be depressed about the outlook, and that's unfortunate.
And what do you expect for the trade deficit on Tuesday?
Well, that's the final calculation of all the trade details, but we have the basic components that show that in the first 3 months this year, the amount of imports surged again 41.3%. Now we have excess goods that'll have to get discounted for retailers to move. That had a negative drag on our GDP. It was actually 4.8% a drag on our GDP, although inventories rose, I think, 2.3%. So that adds back to the GDP. But we had a negative GDP in the first quarter, but when you adjust it for all the trade, we're doing okay. The so this is a buzzkill, and everybody was trying to beat the tariffs, and of course the tariffs have been suspended, so calmer heads will prevail. So I think the deficits in the upcoming months will be more important than what we've just seen.
And finally, let's talk about the all-important FOMC statement on Wednesday.
Well, obviously, as a minimum, they have to have dovish language. Okay. Two, they need to acknowledge economic reality. So here's the economic reality: deflation. We had a bad weekly jobless claims number. Could have been seasonal due to the spring break. And the payroll report looked pretty good on the surface, but it didn't show much of the Doge cuts. So once we include all the Doge cuts, the payroll should be flat as a pancake. ADP was disappointing. It was the weakest private payroll growth in years. So the Fed seems to be anticipating that inflation is going to resurge, even though we have no evidence of that in the data. And Treasury Secretary Bassett and President Trump have called for them to be cutting rates. And the main reason they need to cut, they're way above market rates. So if the Fed does not cut on Wednesday, the market will crash. Okay, we'll have an abrupt sell-off unless the language is so dovish. So I'm expecting a Fed rate cut, and this will be the first of four rate cuts I'm anticipating this year. I should also add that traders, if it, like Bloomberg surveys, the traders are also expecting four rate cuts. The reason is the ECB, the European Central Bank, has cut seven times, but there's more cuts coming, largely because Europe's in a recession, and also their inflation is um, pretty low over there. Also, our inflation should get better because home builders have to discount homes to sell them right now. So consumers uh, are, are are stressed, okay? And it looks like that housing inflation has finally hit a wall, and that because again, builders are discounting homes. So the Fed better cut, and if they don't, we could have a big sell-off. So that's my main message.
Now let's switch over to some of the earning announcements this week. What do you expect for Cummins?
Well, their sales are forecasted to decline 2.7%. Earnings are forecast to slip 3.1%. This is the company that makes the a lot of truck engines, including on the Dodge pickups, and they make big commercial generators. Uh, there have been some recent analyst cuts, so I'm not sure Cummins is going to surprise. So its guidance is going to be crucial. And this is a stock that is affected by the value of the dollar. The dollar's been weak this year, and that would normally help its sales because they do export to these huge generators to other places. But guidance will be everything on Cummins.
Now with Tyson, should we expect another beat this quarter?
Yeah, their sales are only forecasted to go up 0.5%, so that's nothing. But the earnings are supposed to be up 32.2%. We have steady analyst estimates, and this company has a great earnings surprise history. So this is obviously known as the chicken stock, okay? Um, but they did buy Iowa beef processors years ago, so that this is an integrated food producer, and their goods are usually cheaper than what we call the organic food. So. Um, but due to higher chicken prices, they're going to make some extra earnings and extra money.
Now with Ford, how pivotal will management's forward guidance be this time?
It's everything because their sales are forecasted to decline 10.3%. Earnings are forecasted to plunge 96.7%. There's analyst cuts. So their guidance is going to be everything. Now, outside of Tesla, Ford is the next most domestic U.S. auto manufacturer. And even though Trump lowered the tariffs on the stuff made in Canada to 15% for a year, and then a year from now they'll go up to 25. Ford has a lot of really hard decisions to make because Canada can make aluminum cheaper than we can because the hydroelectric up there is so cheap, and aluminum requires a lot of energy. So Ford has aluminum bodies for like the F-150, and there's other aluminum bits in cars. And but the F-150 engine block, that V6 engine, is also aluminum and also made in Canada. So GM just announced after Trump lowered the tariffs, they're still going to take a $5 billion hit. Now GM's making a lot in Mexico, but Ford's has more domestic workers in the U.S., and they got some hard decisions to make. So their guidance will be everything.
Now, Clorox has had a solid history of earning surprises. Could that pattern continue?
Yeah, this is a big multinational, and their sales are forecasted to decline 5.4. Earnings are forecasted to plunge 8.9, but we have a weaker dollar that might help them. There has been minor analyst cuts, but despite the negative forecast sales and earnings, they do have a good earnings surprise history. Obviously, they make all kinds of important household products. The most interesting thing is it's barbecue season now. And the Kingsford briquettes that they sell are actually compressed sawdust. A lot of people don't know that. Okay. So and then they have a black dye to make it look like charcoal. They obviously dominate that business. And but if you have a charcoal barbecue, you might want to actually buy chunks of charcoal versus Kingsford briquettes.
So now what do you expect for Archer-Daniels-Midland?
Well, their sales are forecasted to be up only 0.6%. Earnings are forecasted to decline 54.1%. There are analyst cuts, and it has literally a horrific earnings surprise history. So I have very low expectations for this company. Also, this company is huge in animal feed. Okay. And the number of cows in America are low. Okay. Farmers are just not keeping the herds of animals they once did. Okay. And that has seemed to hurt the company's bottom line.
Is Arista Networks shaping up to be another high confidence beat?
Yeah, sales are forecasted to rise 24.4%. Earnings are forecasted to be up 18.8. There's positive analyst revisions recently, and they have a very good earnings surprise history. So basically, the networking companies look great. Now, Supermicro did confuse some people by saying their sales dropped off in March, but Supermicro makes the really high-end stuff. Arista doesn't make all that. So don't let Supermicro be a buzzkill to Arista Networks. They should beat.
And what do you expect for Fortinet?
Fortinet is sales are supposed to rise 13.9%. Earnings is supposed to be up 24.3. That's healthy. That means their margins are expanding. We got steady analyst estimates of very good earnings surprise history. This is a cybersecurity company for all the cloud networks, and that's obviously very, very important. So they're going to beat.
Now, Rivian has had some recent estimate trims, but what do you expect for them?
Well, believe it or not, their sales are forecasted to decline 15.5%, and operating earnings are supposed to improve 40.8, but they're still negative. So there's operating earnings and there's the overall earnings. So I just want you to know it's supposed to be less bad. But there were some analyst estimate trims. The big story with Rivian is Volkswagen is now behind it. Scout Motors, which is the VW truck they're going to be building in South Carolina, made an alliance with Rivian. And it's causing a lot of grief for the dealers because Scout's going to a direct model, which Rivian does, and bypassing the dealers. But they got $5 billion from Volkswagen as a commitment, and the Scouts is supposed to be using the Rivian software and everything in its vehicles. So I think this is a company that has just to guide higher, and it'll be fascinating to see if the Scout and the Rivian are sold together.
Given Disney's historical ability to surprise, is there room for optimism this quarter?
I hope so. I have a hard time figuring Disney out. They do have a good earnings surprise history. Their sales are forecasted to be up 4.7, but earnings are supposed to be barely up, like 0.3%, and some analyst cuts. But they've been mismanaging a lot of their franchises, for lack of a better word, and they just need some big hits on the movies and things. Obviously, Snow White was a flop. Okay, and but there's a lot of movies coming out this summer, and hopefully some of that rubs off on Disney. But I just have very low expectations for them.
And finally, is Uber going to have another big surprise this week?
Yeah. Their sales are forecasted to go up 14.6%. Earnings are forecast to go up 295.6%. So that's obviously incredible. There's been positive analyst revisions and a very good earnings surprise history. I have two comments about Uber. I just took them the other day in Fort Lauderdale. And normally what you do is you order Uber on the phone and then you go to the rideshare area. Well, I did that in Fort Lauderdale and they wanted to pick me up somewhere else, literally where they saw I was ordering on the phone. And apparently they have a new pickup area, but it's not marked yet in the airport. So it's very confusing. So be aware that if you order your Uber early and it doesn't show up, it's because it's tracking you where you initially ordered. So that's my consumer advice for the week. But the big news on Uber is Volkswagen. They are entering the robotaxi business. It'll be the VW Buzz, and they're backed by Volkswagen. So we are about to have robotaxi wars. Waymo is getting in more and more cities. That's Google. Obviously, Tesla is launching the robotaxi initially with a Model Y, and then hopefully with a driverless vehicle, without a steering wheel and all. And then we're going to have Uber, and of course, the ID Buzz is a very practical vehicle. It can hold a lot, and you will be able to order it on your phone. And they're going to start it in Los Angeles because they want the media attention in a big urban area. So when you think of Uber, don't be surprised if they win the robo-taxi war.
And finally, let's end on some subscriber questions. Can you talk about what's going on with Super Microcomputer?
Sure. The company pre-announced that their sales plunged in March because their customers wanted the Blackwell chip, not the H20 chip. So this is NVIDIA's latest and greatest chip. So they lowered their sales guidance and their earnings forecast. They will have an official announcement soon, but that was a bit of a buzzkill. And but they do make the best water-cooled rack systems for the NVIDIA chips. And the people I know that in the cloud computing business all love Supermicro. So their business looks fine. It looks like they just have to wait for the Blackwell chips to install. And again, their sales are in the billions. So I don't want you to worry too much about this. So, but the stock did get hit and start to recover. My cost basis in Supermicro is so low. I'm still up 500% in the stock. So I don't intend to sell it. When I sell a stock with a low cost basis, it can annoy my clients. The other thing is there is some confusion on Supermicro because it had a 10-for-1 split. So everybody needs to check um, their their cost basis. They might have more shares than they think.
Another one of our subscribers asked that it appears that someone with the knowledge of Trump's upcoming tariff decisions could make a lot of money on the market.
That's correct. The market surged last Friday because China dropped its tariffs on a lot of U.S. goods, and that was a big deal. Essentially, China blinked. They need those things like the little semiconductors that go in all the cars and things. And um, President Xi from China and President Trump were reportedly supposed to get together in May. I don't know if that's going to happen or not, but it would be great if it did. Now, the issue is President Xi has a hard time traveling. There's a lot of turmoil in China, and they like to say if he travels too far, he might come back and not be president. So President Trump would probably have to go meet him somewhere nearby, Singapore, Vietnam, someplace like that. And it would be good though for them to get together and just get rid of these fears once and for all. The fears in Europe of the tariffs have collapsed, okay, largely because when they get together with all these countries, they're dropping their trade barriers, so we won't have reciprocal tariffs. And the only issue is then Trump guilts these countries to buy U.S. goods. So the trade negotiations are going magnificently. The only thorn right now is China. But when it all is said and done, we're going to have freer trade throughout the world. And a lot of people don't see that, but that is what I expect.
Well, perfect. Thank you so much for answering all my questions. And thank you to you all again for liking, commenting, and subscribing and supporting us. If you have any questions that you'd like us to address in the next video, please leave them in the comments below. Also, all of Louie's free links are also in the description, along with a link to his new book. But until then, we will see you all next week with a special guest for a new video. Thanks so much.